Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. When we look at the landscape of building long-term wealth, real estate remains one of the most reliable vehicles available to an investor. However, as your portfolio grows from a single property into a multi-asset empire, you have to be particularly careful with your operational bottlenecks that can quietly dismantle the process. Financial management and bookkeeping is extremely important. Too often, people treat the administrative side of real estate as an afterthought, a tedious task to be dealt with when tax season arrives. But a true leader understands that financial precision is the ultimate foundation for asset protection and long term wealth building. So, today we're going to break down the operational mechanics of landlord bookkeeping, specifically focusing on why you must completely separate your properties to protect your legacy. So, the most common operational pitfall for most independent landlords is commingling funds. When an investor acquires a second, third, or fourth property, they often default to using a single bank account to manage their entire portfolio. Rents from every building flow into one account, while mortgages, insurance premiums, and other maintenance bills exit that same single pool of cash. The mixed approach creates three severe hurdles that you have to watch out for. The first one is a financial blind spot. When all revenues and expenses are blended, it becomes virtually impossible to measure the true return of an investment on a single property. A highly profitable asset can easily mask an unperforming asset. The second one is legal exposure. If your properties are held in separate, distinct corporate entities like LLCs for legal protection, commingling all of the funds into one account can really be dangerous. The last one is tax friction. Makes it hard for your tax preparer to figure out what goes to which property.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
Now, to eliminate these vulnerabilities, your real estate operations must deploy a strict system of complete financial separation. This structure lays out uh, three uncompromising pillars. So, one, the first thing is a dedicated operating account. Every single property in your portfolio must have its own separate bank account. Rents collected from a specific address go into that particular account for that address. Number two, isolated deposit accounts. It is illegal. It is very important that you separate your security deposits that you're holding in trust for your tenants from your operating cash. Tenant scrutiny over this in the event that you have to do an eviction or a tenant moves out and has a dispute can get very, very tedious. And then the third pillar is going to be asset specific ledger tracking. Your accounting software must be able to track transactions at the property level. Every receipt, invoice, vendor payment must be immediately identified to a specific property, not pooling everything in together. Even your tax return requires each property to be separated upon filing. So stop treating your bookkeeping like a passive administrative chore. Turn your financial records into another level of protection. I'm Nathan Weaver. Lead with confidence, live with integrity, and build something that lasts.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.